Morgan Stanley making the case that there is a $6 trillion addressable market, and that's just for, let's call them, the internet names. The analyst with that call is Morgan Stanley's Brian Nowak, joined by, I should say, a large team of people who contributed. Brian, good to have you with us. Let's start at the beginning here if we can. You know, you start with your report saying we're at an inflection point in terms of consumer behavior. For those who sort of haven't caught up to the story, explain why we're at an inflection point and how many years this may play out from here.
Yep, thanks. Thanks for having me. Morning, Dave. Yeah, it is a cross-team collaborative effort because we think AI is at an inflection point somewhat similar to the iPhone moment of 2007, where we saw an unlock in new consumer applications, new business applications, new ways essentially for consumer behavior to change. So what happens with AI? Well, since ChatGPT has had its ascent and really a rapid ramp of overall usage, we think what happens next is you're going to have more personalized and complete e-commerce search experiences, shopping assistants. You're going to have your travel itineraries. They're going to be able to be created by AI. And basically the punchline is we think that a lot of these new AI technologies, applications, and use cases are going to further accelerate the amount of consumer expenditure that goes online, whether it is in e-commerce, travel, online advertising, rideshare, food delivery, et cetera.
All right, so in every scenario like the one you're laying out, there are those who are the companies that will benefit, and there are also those that will perhaps lose out. In the report, I know you try to go through it across a number of industries, but can you give our viewers a sense as to, broadly speaking, sort of who the beneficiaries are and who the potential losers are?
Yeah. In the note, we sort of lay out 11 companies that we think are best positioned to drive and benefit from the acceleration in AI consumer behavior. The big three platforms, Alphabet, Amazon, and Meta, really headline the group that are of the winners. But there are other companies as well. If we go down the cap table, companies like Roblox, like Uber, like DoorDash. I would say that the punchline of how we're thinking about companies that are winners and companies that are more challenged, the AI age, I think, is going to be defined by which companies have the most unique data and which companies have the most ability and willingness to invest in these more expensive AI tools to essentially capitalize on this data and create more use cases for people that will ultimately drive more dollars toward their platforms. So the big three companies, Alphabet, Amazon, and Meta, we think really are best positioned of those 11, but there are 11 companies in total.
I find, Brian, the e-commerce angle interesting because you think that it'll really help e-commerce players beyond Amazon. How does that work? And ultimately making them more profitable, which I think is interesting as well, because there have been some issues there.
Yep, that's right. Yeah, so beyond Amazon, there's a few key players here. That the first thing I think about is the overall Google shopping search experience. I think is going to improve significantly. You're going to have more personalization, more complete search experiences across more sites. And what the sites will be able to do, they will have more information to be able to better match long tail inventory to people who might want to buy it. So a platform like Etsy that has a lot of unique bespoke inventory will be able to better match it to people who are interested in buying those type of goods. Very similar to eBay as well. And so if you think about companies in e-commerce beyond Amazon that have long tail, bespoke, or unique inventory and data about the types of people who like to buy those items, better machine learning technology and integrating it into Google search is actually going to drive more dollars toward those platforms, I would argue.
I was going to say, it seems like it's weird not to mention the sell-off of Alphabet in the face of this new opportunity. Isn't the general knock on would-be so-called losers that it's forcing a CapEx timeline on them that's not of their choosing?
Yeah, that's right. Yeah, good morning, Carl. Yeah, it's we think this is one of the largest mischaracterizations in the current market, where the market is sort of trading Alphabet as if it is an AI loser. We think that's wrong. This is a company that has been investing in AI technologies for well over 5 years and has developed a lot of these fundamental technologies. Well, the near-term discussion is around ChatGPT and OpenAI. We think that Alphabet is going to roll out their own competitive products called Bard and other Lambda-like products they have built out. We're going to get to know those very well over the coming weeks and months. They have been investing for years. And while it is true they are more expensive, you're right, Carl, the incremental uplift of more ad revenue and more high-margin dollars rolling over the platform than this can quickly offset that spend.